here's the problem. He goes, I've seen this before. They're going to roll out this new supply of this new one in July. And it's not only is it going to be, all of you and your silver crowd that are going to buy them up, every collector and dealer and everybody's going to want, the little book that has them in. Everybody's going to want the brilliant uncirculated kind. There's going to be extraordinary demand in July and then in August. And he said, I don't think we're going to get back to a normal situation for Eagles till 2022. You look at the rest of the base metals, and some of the other commodities, silver's not even keeping up with copper. And so I'm not sure in terms of affecting the derivative price, which is what we're talking about here. Not sure we've had that great of an impact just yet. But man, oh man, on the physical market, we're having a tremendous impact. And I might share this with you. I know you know Andy Scheckman real well, and you know the folks at Miles Franklin. You might ask Andy about this. I was down at AppMex, which is the largest online dealer, about a month ago, and I'm talking to Ken Lewis, who's the CEO, and we're just kind of shooting the bull. I've known Ken for a number of years, and we're talking about premiums, and he goes, "Oh man, you guys have just dried up everything, and it's not going to get better anytime soon." I said, "What do you mean?" He goes, "Well, take American Eagles as an example." He goes, "The Mint, U.S. Mint has stopped producing them because they are redesigning them. For the first time in whatever it is, 10 or 12 years, they're going through a whole full redesign." He goes, "So right now, there are hardly any American Eagles out there. So the fact that the premiums are $5 or $6 is because there just aren't any." And now, what was it, $10? Okay, because there aren't any. And then what Ken said, here's the problem. He goes, "I've seen this before. They're going to roll out this new supply of this new one in July. And it's not only is it going to be, all of you and your silver crowd that are going to buy them up, every collector and dealer and everybody's going to want, the little book that has them in. Everybody's going to want the brilliant uncirculated kind. There's going to be extraordinary demand in July and then in August." And he said, "I don't think we're going to get back to a normal situation for Eagles till 2022. Well, then what happens, in the intervening time? People aren't going to want to pay $10 in a premium. So then they're going to start gobbling up Maples and Britannias and everything else. And those premiums are going to skyrocket. And then if the demand continues like it should, because so many are involved in silver squeeze, the generic rounds and bars and all that stuff. And pretty soon the price gets so bifurcated, that everybody will be talking about the fact that silver, the COMEX price is 28, but you can't buy it for less than 38. So what's really the price? And then they got to meet at some point. So I think everything lines up. The demand is having an impact. I don't know it's had an impact yet, but it will if we keep this up. I go back to March of last year when the paper price went to 12, but you couldn't buy it for less than 24. And that was a real wake-up call for a lot of people. And eventually what happened? They met in the middle at about 18. And briefly and then we went from 18 to 28. Because again, that's a real threat to the system, that bifurcated price. Well, wait a second. You're talking to your dealer. Hey, I just saw it go across on Bloomberg at 28. They showed on CNBC at $27.75. I want to buy 20. No. I got $37.70. Well, what's actually the price? There's a physical price and a paper price. So it benefits the banks who want to keep the system going to let price come up, right? Close that gap. Now, here's the problem they face, though. The demand for things like physical silver goes up when the price goes up, right? If anything else goes on sale, you go down to the grocery store, you buy it, right? Silver goes on sale, nobody wants it. But when it's going up, people want it. And so that's a little bit of a conundrum. If you let the paper price rise, you're only going to increase demand, most likely. And I'll give you one more thing. We've got this looming implementation of Basel III that is going to kick in June 28th for the European bullion banks, first of the year next year for the LBMA and the UK banks, and then we'll see how that impacts all the US banks. If that goes through, and I just got done talking to Alistair McLeod about this, and he thinks for certain it's going to, how's that going to impact this fractional reserve digital derivative, unallocated pricing scheme that's been running now for over 45 years. But if you're waiting for price and or premiums to fall, I don't know if that's smart. It's going to make precious metal prices go higher. The best thing you can do is to get some. You don't put everything you got into it. You don't do that with anything. You wouldn't do that with Bitcoin. You wouldn't sink it all into real estate or whatever. But the key is just a gradual accumulation of it. Fortunately, now that we're back to $28, I don't get a whole lot of nasty emails anymore from people that apparently the only ounce of silver they ever bought was at $48 on April 29th, 2011. I was buying metal back then, but I was also buying it in 2014 and 15 and 16 to enough now that my average cost for all my silver, I just figured it out the other day, is about $17 an ounce. Okay, that's the benefit of just continually buying some regardless of because no one's going to be right all the time about where price is going or where premiums are going. So you just let the market, let it do its thing, and you just steadily stack because you're diversifying out of dollars into sound money. And Miles Franklin's a great place to do it. So I encourage everybody, check out my site, check out Miles Franklin, and just make sure you're diversifying out of dollars because they're getting less and less valuable every day. You and I are dollar creditors, dollar savers, right? We get paid for what we produce in dollars. And then what you don't spend, you save, and it's in dollars. Okay? Think of what China as an example. They produce stuff, they sell it to the world, and they get dollars. They build up all these, and so they're saving in dollars too. They're dollar creditors too. And what are they doing? They're slowly diversifying over time into physical gold, physical precious metal. Russia, all these other central banks around the world are doing exactly that. They're changing some of their dollar reserves into physical metal. So if these central bankers are doing it, what's wrong with you and I doing it? It's the same thing. And they might have a little better idea of what's going on than you and I do. So it's not going to hurt you. Worst case scenario, like I said, if you switch some dollars into physical silver, physical gold, you've just diversified yourself. It's all you've done. And it might be the smartest thing you could ever do. So when I came up with that price forecast back in January, I figured, well, we'd exceed the old all-time high and then tack on 10%. So I still think we're going to 2,300. Silver could not have foreseen all this silver squeeze stuff. So maybe it'll get even more exciting. But as you look at the chart, there's at least some, you can go back and look how it played out in 9 through 11. And once we get above 30, we should go to 34 pretty quick. And once above there, 36, 38, I still think that's exactly going to be right. And man, oh man, if anybody's in the mining shares, particularly where, you get that leverage and you can make a little fiat, where do you think some of those shares will be if I'm right? And by the fourth quarter, we're talking, price levels, 2,300 and, 35.